What exactly is the Consumer Price Index? Explained. The Consumer Price Index, also known as CPI, is an official inflation measure produced by the Bureau of Labor Statistics, also known as BLS. The values are presented in a monthly report. CPI is by far the most commonly watched inflation measure by media and investors. In fact, government bonds, which were designed to protect your money against inflation, such as Series I bonds, uses CPI to help determine the interest rate of that bond on a biannually basis. And that's why these bonds right now trade at over 9% on an annual return. The way CPI is measured is that the BLS collects around 94,000 price quotes monthly from about 23,000 retailers, as well as around 43,000 rental housing units. The BLS will then determine the increase or decrease in these goods and services and present the data in a monthly CPI print. Prices are broken out into 8 different categories, with housing being the most important category because it accounts for about a third of CPI. When looking at CPI data, you will notice that there is headline CPI and core CPI. Headline includes all goods and services, while core will exclude the impacts that food and energy have on the overall CPI, because those two things are typically the most volatile. CPI plays a big role in helping the Federal Reserve determine monetary policy. Therefore, it can also impact stocks and financial markets. With that being said, it's probably the most powerful inflation measure in terms of providing market volatility. As you can see by this chart of the overall market, when CPI came in hotter than expected, the market experienced a reversal and a massive downturn, going from just under $4,200 to just under $3,600 on the S&P 500 in about a month's time. So without a doubt, CPI is important to the markets, and it's an important economic data point that you should be following. You should also be following this channel for some more stock content.